Yo, morning. Uh, just finished my trade like, let's see how many minutes ago. 3 minutes ago. I hit the trade. It was a win for the day. There's the RPL. You can see it right there. Awesome possum. No news today on the docket. Next week's news, right? They have a bank holiday. Will not be trading Monday. Tuesday, I mean, is this really even considered news? No. Tuesday, no news. Let's just call it that. Wednesday, 8:30, red folder, President Trump speaks. Whatever. I'll be trading that day. I'm not sure I'll be trading Tuesday. I think I'll have to take Monday off, especially because of the bank holiday, and Tuesday because we're coming off of low volatility from Monday, waiting for red folder news on Wednesday. So I may or may not take it depending on Monday's price action. Thursday, lots of good red folder news right here. We like that. Finally, October release data is being taken out. We're finally getting what we deserved in October, right? Friday, definitely going to be trading as well. Anyway, so today, actually coming into market open, I had a bullish bias, right? Let's go on the 4 hour really quick. Boom, boom. 4 hour. Let me move me. There you go. Okay. So on the daily, actually, we were bullish. We were all the way up here on the daily before market open happened, right? So, we were also delivering from sell side liquidity down here. So I was like, okay, well, so far we're bullish on the day. Come down on the 4 hour. I'm thinking we're going to go after these highs, especially because the previous day high is right here as well. So it made sense to me that that could be our target for the day. Let's see. Let's come down on the 1 hour. On the 1 hour, I saw absolutely nothing, other than this 1 hour high that I could, potentially target if we were to continue distributing through this area of buy side liquidity right here. But yeah, anyways, on to the 15-minute, right? We had London and Asian lows unswept on NQ, but we swept on ES prior to market open, which gives us a bullish SMT. On top of that, we at that point were respecting bullish order flow. Now, the one thing I kept in mind was we had a lot of low resistance liquidity resting below. So, plus, Asian and London lows. So it wouldn't surprise me if price did want to take all that out coming after that low right there. Um, yeah, so coming to market open, that's what I was looking for. Either price was gonna, keep coming up, right? And then I just look for continuation and take it to the previous day high or this hourly right here. Or price comes down, sweep, and then we get delivery, right? That could have been an option. Or for some reason, we just come up, manipulate, and then come down, and I look for continuation. I honestly think continuation trades are my favorite trades. They are pretty reliable. It's much better than having to guess where the manipulation is. Rather, when you're distributing, you just know that price has one directional bias. Maybe it could fuck you up sometimes still. I'm not saying price doesn't do that, but it's reliable. Anyway, so at first, super choppy, man. These first 15 minutes were just horrible. I didn't even care to look on the lower time frames. I was on the 5 minute the whole time. Then price started delivering. We displaced through the London low. I'm like, okay, maybe we are bearish. But what would have confirmed it for me whether we were or weren't bearish was displacing through Asia low. Either we were going to sweep it and then reverse because the overall market structure was bullish, or we're going to displace through it and I could take a continuation off of a 5 minute, 15 minute fair value gap, whichever one it'll be. Anyway, so so as you can see, we make this last 5 minute fair value gap right here after displacing through Asia low, which was my confirmation for continuation trade. If we had just swept, wicked, and rejected from it, then I wouldn't be looking for a continuation. And if I would be, I'd be very skeptical about it and low risk. Anyways, come down to the 1 minute. Super simple, super textbook trade. You have the 5 minute fair value gap starting right here. And then all I wanted to look for was, rejection from the 5 minute fair value gap. Obviously, I preferred to not fill the fair value gap, which shows bearish order flow. And then I looked for the highest time frame fair value gap, which was not the 1 minute, which was not the 2 minute, but the 3 minute fair value gap that was presented right here. So as soon as we came up, chopped, came into the 5 minute fair value gap, broke structure, and closed below the 3 minute fair value gap, I was in for a market order of I think 15 macros. And so this was like a 1-to-1, let's say a 1 to, I remember my stop was like 923 and then my take profit was like $1,040. So you could do the math on the risk to reward ratio. Now, I wasn't a fan of the volatility, and I don't know, I wasn't a fan of the rejection we got from tapping into this 5 minute fair value gap. So I did not intentionally, I did not target this draw on sell side liquidity and or this draw right here. They absolutely are valid draws to take, right? It makes sense because here you just have a bunch of low resistance liquidity. Sorry, hold on. Here you have a bunch of low resistance liquidity, right? That's a good, that's a good sign that price is going to sweep all that. And then you finally have this last bit of sell side liquidity resting right here. And same thing right here. This was the previous day low, which is also really important to note. That would have been a good target as well. Anyone could have taken this trade. I'm not against targeting the previous day low or this sell side liquidity right here. But like I said, I was not a fan of the rejection we got. So I'd rather play it safe than play it sorry. And I just went for a 1-to-1. It was more like right here, actually. I lied. That's when I had gotten stopped out because I did not take it right there. Yeah. So that was my trade. I didn't target the previous day low. I could have made, I think, like an extra $200 or $300, but it wasn't worth it. Yeah, that's it, guys. That was a trade. Super easy, super textbook. Continuation trade, fair value gap, retrace, break of structure, and inverse fair value gap. Target a 1-to-1 risk to reward ratio on a high conviction setup. And yeah, I'll see you guys maybe next week, maybe not. I just felt like posting today because I was in the right headspace for it. And yeah, you guys have a good one.